As the market settles into late June 2026, GameStop remains a core focal point on Wall Street due to an unfolding legal battle, a relentless hostile corporate raid, and a completely restructured business model. The technical indicators show the stock consolidating tightly, trading just under its 50-day and 200-day moving averages, which are sitting at $23.10 and $23.12 respectively. This tight consolidation pattern suggests that the stock is building a base for what could be a significant move in either direction, with many technical analysts viewing such patterns as precursors to major price action. With 22,000 employees pushing company's specialty retail vision forward from their Grapevine, Texas headquarters, GameStop has successfully stabilized operations and created a sustainable business model that can weather economic uncertainties. Furthermore, with a one-year beta of 0.84, the stock demonstrates lower volatility compared to the broader market, setting a secure staging ground for its highly anticipated next earnings report on September 8, 2026. This reduced volatility, combined with the massive direct registration numbers, creates a truly unprecedented situation in modern financial markets, one that traditional analysts simply do not know how to properly evaluate or understand. Ryan Cohen is not simply resting on the success of GameStop's survival and stabilization. He is aggressively pursuing a massive expansion of the company's ecosystem that goes far beyond what any previous management team had ever contemplated. A sudden wave of corporate governance drama has gripped the company as a GME shareholder has officially filed a lawsuit in an attempt to delay or outright block a critical investor vote scheduled for July 7, 2026. The lawsuit targets CEO Ryan Cohen's massive proposed performance-based incentive package, which could scale into an unprecedented $35 billion incentive award over time if targets are met. The filing accuses GameStop management of a bait-and-switch maneuver, alleging that proxy statements were misleading and that crucial voting rules were changed behind closed doors. Shareholders are actively weighing these governance concerns against the backdrop of the company's historic financial performance. The most groundbreaking development is Cohen's refusal to back down from a potential hostile takeover of eBay, indicating a willingness to bypass entrenched management and take his proposal directly to the shareholders if necessary. Despite eBay's board publicly shooting down GameStop's unsolicited $55.50 to $56 billion hostile takeover bid as neither credible nor attractive, Ryan Cohen has changed his playbook. Cohen has initiated a direct-to-shareholder messaging campaign, blasting eBay's current management for massive sales and marketing spend, $2.4 billion in fiscal 2025, that yielded less than a 0.75% increase in active users. This aggressive stance demonstrates Cohen's unwavering commitment to his vision and his complete disregard for conventional corporate etiquette that typically discourages such direct confrontations with established management teams. Cohen identifies eBay as a highly complementary asset to GameStop's existing business model, seeing synergies that Wall Street analysts have consistently failed to recognize or appreciate. By combining GameStop's physical retail footprint, massive gaming community, and newly optimized e-commerce logistics with eBay's expansive peer-to-peer marketplace, GameStop could create an unstoppable hub for gaming, electronics, and physical collectibles that would dominate multiple sectors simultaneously. Cohen views this massive acquisition as falling perfectly within his deeply established circle of competence in digital commerce, an area where he has repeatedly demonstrated extraordinary success and insight. He sharply contrasts his own philosophy, which involves putting massive personal capital on the line against traditional corporate boards and CEOs who collect tens of millions in risk-free compensation without ever purchasing shares on the open market. This fundamental difference in approach highlights Cohen's genuine belief in the principle of having skin in the game, a concept that he argues is essential for true alignment between management and shareholder interests. His pledge to let the true owners of the business decide its fate represents a profound push for ultimate shareholder value and a rejection of the traditional top-down management approach that has dominated corporate America for decades. This commitment to democratic capitalism, where shareholders actually have a meaningful voice in major corporate decisions, sets GameStop apart from virtually every other publicly traded company in the modern era. Cohen's confidence in this aggressive expansion strategy is backed by an undeniable historical track record of achieving the impossible, repeatedly demonstrating that conventional wisdom and consensus predictions are often wrong when it comes to truly innovative business models. He embraces the extreme difficulty of his goals, famously channeling the relentless optimism of the movie Dumb and Dumber by recognizing that even astronomical odds still mean there is a chance worth pursuing. His career is defined by taking on giants and winning, creating a pattern of success that should give any skeptic serious pause before dismissing his current ambitions. When building Chewy, Wall Street gave him virtually zero odds of successfully challenging Amazon's e-commerce dominance in the pet supply sector. Yet he triumphed and built a company that was ultimately acquired for billions of dollars. In my opinion, this track record of defying impossible odds should be the primary factor in evaluating his current plans. Yet, mainstream analysts continue to apply conventional metrics that fail to capture the transformative potential of his vision. Similarly, when he joined GameStop's board, the financial establishment had entirely written the company off, confidently predicting multiple bankruptcies well before the year 2026. The consensus among analysts was that GameStop would inevitably succumb to the shift toward digital gaming and become another forgotten relic of the physical retail era, joining the ranks of Blockbuster, Radio Shack, and countless other retail casualties. Today, GameStop is not only solvent, but holds nearly a $10 billion valuation, representing a stunning reversal of fortune that defies every conventional prediction made about the company's prospects. Cohen's absolute refusal to quit, bluntly stating that he is definitely not going to give up and he is not going to stop, serves as the primary engine driving GameStop's future trajectory and provides the inspirational leadership that has galvanized both employees and shareholders. This relentless determination, combined with strategic vision and operational excellence, creates a powerful combination that Wall Street continues to underestimate at its own peril.